Hello, everyone. Hello, sir. Welcome back to another episode of Decoding Markets. Another Monday, fresh start, fresh week we are heading into. So, welcome everyone to a fresh start of a new week. So, sir, what's the lookout for today's week? Like,
So we are starting on a low point because the market has been falling for how many? Three, four consecutive days, at least three, I think. Yeah, this is the third consecutive day that it has fallen. And in doing so, it is now at a 5 week low. So definitely sentiment is affected in a very big way. Having said that, we are tracking some very near-term sentiment indicators on strike, which are getting close to oversold readings. What we really need is a price confirmation. What does price confirmation mean? Is that an actual price reversal? After falling for 3 days, you need it to start rising. Once it starts rising from an oversold condition, we can say that we have a game in play. But right now, so initially, what had happened 5, 6, 7 days ago, also we thought that maybe we got some oversold reading, but that was only on Nifty. It was not in the broad market. Now, what has happened in this 3 day fall is that you have sort of spread that to the broad market, mid cap, small cap, total Nifty. I'll just share one chart which I've just published to India Charts Insiders. So yeah, we are sharing something that is only sent right now to paid India Chart subscribers. So if you like these updates or you like to do it yourself, then use Strike. Otherwise, you just get to read it in my analysis, and that is this is what we are really looking at is the percentage of stocks with an RMI buy, which are in RMI buy signal, which means they're in a bullish mode based on the RMI, and this number when it falls below 20%. Okay, so there is some glitch happening here. So I'll just refresh this page. What is happening is that after a moment, it just goes back to the older data. So yeah, now I've reloaded it. What you are really seeing is a reading of 17. Okay, on total market means all listed NSE stocks, which are around 2,700. So when we are reaching 17 or any reading below 20, it can even go to 10. So I'm not saying the market can't fall tomorrow, but having entered this zone, this red zone here, we are getting to that oversold zone where very few stocks are now showing a bullish reading, and when all stocks, it can't go negative, right? So therefore, when a large number are down, showing negative readings on momentum, we start anticipating that things will change, and this is sort of what we are also seeing on our classic indicators, which is the swing and average swing. If I actually plot both together, then what you actually see is that both of them, the swing and average, are both in sub 20 region. One is 15 and one is 17. So these are also getting into the oversold territory. So once again, what I said is we are just waiting for price to get a price reversal, because that becomes the first sign that okay, some stability has come. But the interesting thing about today was broad market, because earlier it was for last out of this 5 week fall, first 3 weeks were only Nifty falling. Mid cap, small cap said I don't care. Last 4 days, mid cap, small cap is tarnished. So that sort of got that part of the market into the oversold zone short term. But that is also what happens is that usually there's capitulation in the late stage, because what happens is people who've lost money speculating eventually sell their stocks and cover their risk, is what I've historically seen. When I've worked so many years with a broker, how clients behave. So that last selling in the broad market often comes because of margin calls and things like that, and that is also the capitulation. So we've entered that phase now, and whenever it ends, things should pick up and improve from here. That's what we hope. Let's see what happens tomorrow.
so looking on the current market trend, what do you think? Like, is it a up, down, side? Which trend it is?
So this is a time frame question. So if I take a 2-3 week period, it's in a downtrend because we've been falling for 4 weeks consecutive. If I take the
Right.
last three, also it's in a downtrend. It's been falling for three consecutive days. But what we try to figure out is whether this will be a sustainable fall, which means will it become a 1,000-2,000 point fall? Will it is it a correction in a bull market? For longer term investors. And so, where is the basic? What should be the opportunity? Should be a buy on dip? Should be a sell on rise? So these are the answers we try to get in the overall picture. But the trend, of course, has been down, and we've been trying to anticipate that it's a correction in an uptrend, the scale of which has been more a time correction so far, because in 5 weeks we haven't lost or barely lost 1,000 points, and rather than a price correction which would have been lose that much in 4-5 days, then we call it a price correction. This has been more time wise a grind for the whole of July. But yeah, as of now, the trend has been down, and we are watching, what can happen next.
So, moving to the next question of today's episode is, always we have heard or listened to people, they always tend to say, always look on the price action, right? And price action के साथ साथ don't forget to look on the volume. So, what does the volume and price action reveal about the buyer and seller sentiment or strength?
So the theory of price and volume goes like this: that if the trend of the market is up, then
Hmm.
prices rise with rising volume, and prices consolidate or correct with falling volume. Okay. So price and volume are directly correlated. So if prices go up, volumes will increase every day as they're going up higher, higher, higher. And you'll get peak volume near the top or close to the top, few days here and there. And then you get a correction in which volumes go down. Now, the correction doesn't mean you'll give up all the gains, but even if it's a sideways consolidation, volumes will taper off. Then again, when the uptrend resumes, again the volume increases. So this is the pattern of an uptrend. However, in a downtrend, this pattern reverses itself. Okay. And in doing so, what happens is when prices fall, volumes increase, because now you're gone from greed to fear. People were buying on the way up, that was greed. In a bear market, there is more fear. People are scared. What will happen? What's next? Bad news. So there's capitulation. There is more selling at the bottom. And whenever the market bounces back from a bottom because it got technically oversold, volumes decline. Okay. So they decline on the bounce and then they again increase on the fall. And that is the nature of a bear market. Now, what is the interesting feature of this? How can we get a market turnaround reading? It's by looking for volume divergences. So the interesting thing that might happen sometimes is, as a market keeps going higher and higher, initially you are seeing volume and price correlation. But somewhere in
Right.
the late stage, you will see that correlation break and you will find that a market rallied to a new high, but volume nahi hai. And that is
This
the early
happens.
warning. Yeah, this is an early warning that maybe a trend reversal is coming, that the pattern is changing. And then on the subsequent fall, if you see an increase in volume, that is also a sign that the pattern has changed. So this kind of a pattern shift in volume may start happening even while the trend is already up. And so you can get an advance warning. Maybe not always, but many times. And the
So,
same can
but
happen
there,
at the bottom also.
hmm. But there are some instances where we have seen, like making a lower lows, and when there is a shift and change, and it becomes to make the higher highs, right? Whenever we see that shift, sometimes it happens so that the volume haven't like gone up. The volume was same, but we see a shift in that graph. So why is that?
No, so there may be in late stages of a fall. What is happening? We are saying, okay, volumes increase on the way down, they reduce, they increase, they reduce. Somewhere, when the last fall is occurring, there also the volume reduces on the way down.
Hmm.
Okay. Initially, it's possible that the first rally is slow and there isn't much volume. It can happen. Okay. But if that happens, then it's also possible that when the price is correct, you may fall to a higher bottom, but on even higher volume than at the bottom. Now, this is what in momentum analysis we call this a reverse divergence. Okay, a normal divergence is lower low in price, less selling volume. But the reverse divergence is higher low in price and higher volume. So any kind of divergence that you see, any kind of divergence, can be a sign that the previous trend is changing. Okay, so we should not worry about why the pattern is changing. A change in pattern is a change in or potential change in trend. Yeah, I think we lost you. Now you're back.
No, I came back. I came back.
Yeah.
I came back with another question. So yeah, sorry for that network issue. So moving to the next question for today's episode. That is our last question. Um and so it's related to a very like it may say that it's a very close topic to you. That is Elliott wave. So whenever we speak about Elliott wave or we search it on internet, there are very less names and very fewer names. And you are one of the top top people in the entire Indian community or the trading community over here, whose name come for the Elliott wave analysis. So what we think that correct wave identification is the key to predict market trends. But mistakes like misleading or mislabeling waves or ignoring the fractal nature can lead to poor trading decisions. So how Elliott wave theory helps to eliminate these issues?
Yeah. So I think there are a couple of questions inside your question. So we'll try to answer each of them. One is that trend following and Elliott wave analysis have one thing in common. Trend following is like Dow theory: higher high, higher low. You have a trend. Elliott wave analysis also starts with a higher high, higher low. The only difference is that when we make a higher high, the first higher high and low, in Elliott wave analysis, we mark that as 1 and 2. Whereas in a Dow theory, we don't really mark anything. We just say, okay, it's the first move, or it's a sign that the trend is changing. So that is the first thing. The second is that wave analysis is based on the idea that a large crowd is participating, and therefore that crowd psychology, the mass behavior, is reflected in price patterns. Okay. In other words, that the behavior of the crowd is patterned. There's a pattern to the behavior of crowds, which everybody will agree. But we are saying now we have a barometer. It's called the stock market. It's a barometer of the crowd. They're thinking, what news they are listening to, whether it's war, whether it's earnings, whether it's they're also reacting to their own home situation, fighting with his or her wife and husband are fighting. So their fear and greed is reflecting in buy and sell decision, everything. Okay, because we are not talking about 5 people. We're talking about
Right.
millions of people taking investment decisions every day, whether it's direct or indirect through mutual fund, direct equity, PMS, ETF, whatever the means. All their actions are behavioral. Okay, it's a net psychology of the crowd. So when we study Elliott wave analysis, we are essentially studying crowd psychology, which we believe has a pattern, and that pattern has been coined as Elliott wave. The Elliott wave fractal, as you use the right word, that it's a fractal, and this fractal moves 5 waves in the direction of the trend, 3 waves against the trend. Okay. So the utility of this, like you said, mislabeling and labeling it correctly. Now, one is, of course, you need guidelines, which is why where our mentorship program comes in. I think I have. So I don't stake many claims in the market. Nobody will ever hear me claiming anything. But there's one claim I'll make. I don't think I've simplified it more than anybody how to count waves, because the methodology that we describe in the mentorship program is not there anywhere, in no book, in no text, in no YouTube video. Okay, and that is why it is unique. And it's according to me, it's like as simple as teaching ABC to a child. I couldn't have simplified it more, and it was my own way of interpreting it, interacting with the EWI and trying to understand, how it should be correctly done, because there has to be a method to the madness. It cannot be on gut feel. You cannot mark 1 and
Right.
2 on a gut feel. It has to be on a process. And then that process built on many layers. Initially there's momentum, then there's sentiment, which is also behavioral, crowd psychology studies. Those all came later. But even without all of that, if I just have to count the waves, there must be a method. So that is something, the first thing that we defined, so that you don't do mislabeling and wrong labeling. Then the second part of your question comes that, oh yeah, but how do we use it to eliminate things? So I,
Right.
in fact, call Elliott wave analysis the art of elimination. The reason for that is what I realized is that there are only three rules in Elliott wave analysis, and everything else is a guideline. A guideline means this is what generally happens 80% of the time or 90% of the time. But a rule is something that must happen. Okay. And there are only three. So therefore people think that Elliott wave analysis means this is what exactly should happen. No, that is not Elliott wave analysis. Elliott wave analysis is, if this does not happen, what is not possible? Okay. So
Like
when a certain
it's
rule is not,
something like so sorry to interrupt. Is it like uh you're thinking or you are interpreting all the consequences or all the possible consequences? Like if this happens, then this is the consequence. If this happens, then this is the consequence.
no, not consequence. See, that is what I said. It's not the art of knowing what. When you say consequence, you're saying what will happen or not happen. I'm saying it's the art of
Right.
knowing what will not happen. The opposite. Okay.
Okay.
So it is the art of elimination. So when we mark 1 and 2, then we have to judge, can I mark the next move up as 3 or not? So then we refer to these three rules. If it meets those rules, I can. If it doesn't meet those rules, I can't. And that way, we eliminate uh, wave counts, or let's say different paths of the market that it can take. We eliminate them, that okay, it cannot do this, it cannot do this, it cannot do this. And then we'll probably be left with one, two, or maximum three possibilities of what it can do. Usually it's only two. Okay, so we have that's why we call a wave count. Then we say there's an alternate wave count. So we do sometimes have an alternate possibility that if it doesn't work out like this, it may work out like this. But at least we can come down to two possibilities rather than have five. So it would be too much guesswork. Okay. But to
Right.
come down to that two, I have to eliminate everything else which doesn't meet the rules. Okay. So
Got
the
it.
rules are
Matlab,
not
a
about,
set of rules.
so the rules are not about ki this is how the market should behave. The rules are that this is what it should be, and if it is not, then it's eliminated. Okay. So if
Hmm.
if we say can it do this, we have to see, okay, does it meet the rules? Okay, then it's eliminated. Okay, and so it's down to these three rules. I can even mention what these three rules are. They're very simple. The first one is around Dow theory, which means that if this is the starting price of price, if it's in an uptrend, when it goes up, it must come back to a point which is not lower from where it started, which means you must make a higher bottom, right? Very basic. So rule number one is just that. It's basic, that you must not make a lower low. Then only you can mark 1 and 2. Otherwise, you can't. So basically, anytime the low is broken, 1 and 2 is cancelled out. So it gets eliminated in that sense. The second rule is the most misunderstood rule on social media. It's misused because people often say third wave has to be the longest. That's not the rule. The rule is the third wave cannot be the shortest. Okay.
So just a moment. It's technically the same thing. Like
No, it's not the
has to be
same
the
thing.
longest, but it's not to be the shortest.
Yeah, there's a difference because when we are saying not to be the shortest, we are saying
Hmm.
between the impulsive waves, which is 1, 3, and 5, which are directional, right? When we say 1, 2, 3,
Okay.
4, 5, 1, 3, and 5 are in the direction of the trend, and 2 and 4 are corrections, right? So
Hmm.
between 1, 3, and 5, 3 cannot be the shortest.
Got it, sir.
Okay.
Got it.
So when we say 3 is the longest, what people say ki if wave 1 moved up by 10 rupees, then wave 3 should go up by 30 rupees. No, that's not the point. But if
That
wave
means
3 goes up by 5 rupees, can it be wave 3? That is the question you have to
Hmm.
answer. That's the puzzle. Okay. And so the answer is very simple, that then if it has to be the shortest, the 5 cannot be longer, and so on. But that's the measurement that we have to do. And then, okay, if that's true, then what is possible? So there are two possibilities that can come out of a shorter third wave. So now I'm not going to go into a full class on it, but that's the second rule, right? So third wave cannot be the shortest. So when people say that it should be long, again, that's a wrong reading of the rule. Okay. And then there's the third one, which says that the fourth wave, which is a correction after the third wave, should not fall into the price territory of wave one. So, which means
Hmm.
that the third wave should go far enough, or wherever it has gone, it should not fall back, below the previous high. It should not go back there. If it does, then it's not a fourth wave. So that's again elimination, right? If this happens, it's not this. If it doesn't happen, then yes, it can be this. Okay. So there is a yes and no somewhere there. It's like you can draw, like in software engineers make that, what do you call it? Those boxes and circles, right? So it's something like that. You're sort of making one, yes, this, then okay, 3, 4 is possible. Yes, no, this goes here, flow chart. That's what it's called. The word was not coming to my mind. So you're mentally creating a flow chart, but you're doing it by marking waves on the screen. And so these are the 3 main rules that allow you to eliminate all that is not possible to answer your question. And that is why the understanding of how to apply these rules on real-time charts becomes essential. And to do that, if you don't know it, join the mentorship program.
Right. That's what I was also gonna say. Like, if you guys can understand this, I think so. This is the thing even a child can understand. So, guys, you should join the mentorship if you want to excel. First and second thing, please join our decoding sessions because you might get to know many insider things. It was a great session, sir. I get to know the Elliott waves, at least. The set of rules.
You know the rules now.
Yeah, at least I know the basic 3 rules.
So, when somebody breaks the rules, they'll throw the book at you, which is basically that, you're not following the rules.
Right. Eliminate it. That's it. No, it's good. Like, the possibilities, now you are creating the possibilities. Like, these are the probability. Like, pehle kya hota tha? Earlier, people used to say that if this can go, there was a 50-50 possibility of that. Whereas in Elliott waves, what I can feel is these rules are eliminating all kind of possibilities, and it's coming down, it's narrowing the funnel to 1 or 2 things where people can actually see what it can be the next move.
Yeah.
Thank you, sir. It was a great thing. So that's it for today's session. Let's move to the questions, sir.
Sure.
Just a gentle reminder to every viewer over here. If you guys want to ask a question, please ask an entire question. Please don't get us open-ended questions because we can't be judging your questions. Like, we want the clarity of the question so that we can give you the clarified answer what you guys are wanting. So that's where, please, it's a humble request to everyone over here that please post the entire question. Yes, sir. So going for the first question, Alok Kumar.
What is your thought on current Nifty setup based on strike setup? So we discussed the strike setup already, which is various sentiment indicators hitting oversold. And so what I have to try and consider is, can I complete something on an Elliott wave basis for Nifty at this point of time? It is possible. The only issue being, because see, these are minute counts from the top that we made in June all the way to now. There are multiple legs. Now, when you have multiple legs, the possible is you can have at least 2 different ways to count this, and you'll keep changing. And every time you change, people also complain that because they expect, like I said, expectation is this is not a fluid subject. If you say it is like this, it must be like this. But this has got to be a fluid subject. So you have to be able to change where it changes, or be able to think that, okay, it can do this and maybe it can do this. So in doing so, we can have a setup which says that, yeah, this was the final leg down. What we don't have is a confirmation. So I said that in the beginning, oversold, but confirmation would be only after we turn positive. Then we will take a sense of what the count is. Is it correct? And does that mean that the final low is in place or not? And even after we think it is in place, there can always be the possibility that no, maybe an X and a Z was pending. Okay, so this goes to another question below, which I see on this subject, by SP Sharma. Can it be Z? When do we know that it's eliminated? So the answer is you don't know. Okay, either Z is over or A of Z, or I put out an alternate count saying that what if we are still in Y? What if we still have an X and a Z left? Which is also what you may see in the Nifty 500, because the Nifty 500, which has a slightly different wave structure, is only ending Y now. So either we complete this correction here, or there will be still another X and Z. So now this is where it calls for your fleet-footedness to first position yourself with the consideration that maybe this is a bottom, and then at the same time have the alternate consideration that if the move up fails, like it has done already twice in the last month, once again at some critical level in 3 waves, that you are prepared to take it off and step back. If you are not, if and this is just how it is, like sometimes you just have to be confident. So it's possible that me, when I communicate, when I look at oversold readings and I see this is extreme, I take an aggressive posture in my communication that no, this is it, it's not going to fall more. Sometimes it works out, sometimes it doesn't. Okay, but does that mean I should not do so? Okay, when you have a reading, multiple readings coming together, so there is a trade setup. The trade setup can either give you a very sharp bounce, or it can give you a complete trend reversal. Okay, so when I have these two considerations, either you're getting a very sharp bounce or a complete trend reversal, I will presume it can be a complete trend reversal and position accordingly. And if it's not, be prepared to run for the door. Okay, that is the only way you can deal with it. I wish I had a better option. I wish I could say certainly based on this tool, this is the only way it will happen. But then that would be giving certainty, right? That would mean going back to our rules. That is not about being certain. It's about eliminating what is not possible. So, and that certainty does come. So from wave analysis, say for example, we are falling for 3 consecutive days. The day we close positive, we will have certainty on some part of the wave count, if not all. Like for example, we may have certainty that at least the last 3 days fall is 5 waves. That gives us 2-3 outcomes. Okay. The most minimum outcome is 61% retracement of the last 3-day fall. This is the minimum outcome. So at least we can deal with that minimum outcome, and so that's the thing that we have to start with. But that minimum outcome, sometimes you come a maximum outcome कि 61% भी cross हो गया, previous 20 day में भी cross हो गया, और after 1 week you're at an all-time high. Then you say, I thought it will stop at 61%. So I can't work with that certainty that it will stop there. I can only say it can bottom here. Once I get a confirmation that it is bottoming, I consider whether those possibilities exist, the bigger ones, and keep in mind what the smaller ones and where it can go wrong, and then act accordingly.
Right.
So that's a little bit of strategy comes into it.
Right. Yeah. Moving to the last question, sir. It's from Mahesh.
Well, I mixed 2 questions, so by that nature, this is only the second question.
Right. Because you took one other question, sir, from the.
I made it part of the same because it was common.
Right.
If a stock is in FNO, will this restrict the actual price action or potential of the stock? Yeah, this is a interesting question. At least in reality, we have seen this happen. We hope that it is not true, but in reality, stocks that once they come into FNO, we do see their momentum slow down or their movements get curtailed. To some extent, it may have to do with what is called hedging. Hedging by the derivative operators who run options books, derivative books, arbitrage books. So suddenly, once a stock is in FNO, there will be arbitragers who will buy cash, sell future. Then there'll be option writers who will do delta, gamma, and all kinds of theta hedging. And when they're doing all that and they're trying to move around price action, entering, exiting every month, it actually results in lower volatility. So now there is an interest in keeping volatility down, especially if the options open interest far exceeds the future open interest. Prior to 2010, the future open interest used to be 70% of the market. Today, the option open interest is 80% of the market. So therefore, earlier you used to see wild movements, Nifty going lower circuit and all that. And if there was some very big news or crash, that doesn't happen anymore. So when you have a large futures market, then you tend to have speed, and participating. And so if a stock comes into FNO, you'd see speed. But now it's the opposite because options market is bigger than futures. When a stock comes into FNO, it loses speed.
Right. So that's it for today's session. That's it, sir. So
There's someone writing about strike. What is he saying?
yeah. So just Abhishek Chavra.
Platform since its launch will be using at least 10 years from now. Yeah, brilliant. It has improved my trading a lot. Yeah, thanks Abhishek. And in fact, and I thank people who can see that while we are building the platform, it does have some glitches from time to time. That's what always happens in early stage. But we are working on all of them. We are not only working on that, but new features and a mobile app. The work on that has also started. So we do believe that it will be the experience will only improve. It cannot, and it will get better with more tools, not only on the technical but fundamental side as well, and combination of all factors being able to give you real-time results across. So thanks Abhishek for that. Now request you to start the fundamental scanners. It's already ready, Abhishek. We've mentioned this before, but due to some data coding things that they were trying to clean up, it has just gotten delayed due to other things. All the tools are ready. Chavan is telling me that this week 100% we will launch it. So let's hope that by Saturday it is live. In valuation is a concern for FII or something else? Oh no, sorry, that's a different question. So yeah, that is answered. Is valuation a concern for FII? I think it's something else. Okay, so that's the final question for the day. I think it's something else. I don't think it's valuations, though that is what media says. I think to some extent, but not really fully, because FIs have been selling for years now, even when valuations were less. I think the real reason is that there is tax on capital gains, okay, on FIs, which was introduced in 15-16. Prior to that, we never used to get monthly negative flows from FIs. After that, it happens every few months. Moment the market stops rising, you see the flows turn negative. And so I think it has a lot to do with that. When I was in fund management, we tried raising funds from NRIs and foreigners. And the first thing they told me is that we don't like countries where you have withholding tax. That is one of the biggest concerns of foreign investors. They don't want to allocate money to a country with withholding tax. So even though India may be the highest growing economy in the world, one of the reasons we are not attracting the kind of money we should have been is withholding tax. So I think that's a big mistake. It's a error on the government's part, we can say, by keeping that money out. But we can also say that no, it's good of them, because then that's keeping our capital account capital account under control. We are not completely dependent on foreign flows, which can be hot money, etc. There are counter arguments and arguments to this, and why shouldn't we tax them equally as domestic investors? You can argue that, but then there are multiple countries in the world that don't tax foreign investors. So what policy mandate you want to follow? Do you want to attract more foreign money? Is a government call. But the reason I think is capital gains tax. You do away with that, you'll get billions of dollars of flows every month, guaranteed.
Right. So that's it for today's session, sir. That's it, guys. So this is a wrap up. Let's meet Wednesday, same time, and with new questions and a new episode of Decoding Market. Till then, stay tuned, trade great, and use strike. And if you want to know more about Elliott waves and analysis about it, and Rohit sir, you guys can join our mentorship program. You can visit our website www.indiacharts.com, and you can call our representative. The contact numbers are mentioned over there. And that's it. Thank you. Thank you, sir.
Thanks.